Hi guys, it's Thomas here from COTBase.com. Welcome back. We are back with Commitments of Traders reviews after a long period of waiting for CFTC to catch up with the reports. Unfortunately, due to the government shutdown, we had to wait for these reports to be back on track. They are. So we're back with our weekly reviews. And we're going to be analyzing the 50-second Commitments of Traders report. Now, before I start, just for those who are new to COT analysis, let me remind you that here at COTBase.com, we, of course, deal with this wonderful data, and you will find all the educational material you need to start your journey. If you want to see when the next report is available, we have our release schedule updated. Of course, this corresponds to what CFTC has. And let me remind you that we are launching a New Year deals. So you can check out this page and you'll find a lot of great prices for our most successful products, the COTBase Premium, the website access, and of course the wonderful iCOT Intraday Indicator. Of course, you can buy both at the same time at great discounts. But let's get back to the review and start our analysis with natural gas, which you can see is on top of our list with a 29% change in commercials net positions. We are, of course, analyzing the classic COT report type. It has the longest history of COT data. We're analyzing net positions and futures and options data combined. So let's open natural gas and see this recent change. Now, of course, this change, 29%, is based on the width, basically, the most bearish and bullish readings on the chart. And this recent change is 29% of that range. Okay, so it is a bullish change signal suggesting strengthening in the near term. COT change signals are, of course, great to use in shorter time frames. But if we move on to a 5 years chart, then we have a chance to analyze the greater picture and the stress in traders' net positions. And you can see, if we take this horizontal line and put it on the commercials net position, you can of course see that commercials are represented with the red chart over here. Green represents large speculators, and on a separate scale chart, you'll find small speculators, whereas CFTC calls them non-reportables. They don't report to CFTC. Then you can see that this is definitely a bullish extreme. Does it mean we're going to suddenly see prices rising in natural gas? No, not at all. But it does suggest that we may see some sort of a change in the trajectory of the price. So you can see that the last extreme we had actually not that long ago coincided with this bottom region over here as the market was coming down. You can see that the stress in traders' net positions built up to a level. Now, of course, once we saw the rise, we saw traders shifting their positions. But right now, we are witnessing a decline since early December. And with that, we see some sudden changes in traders' net positions. So not only do we have a bullish COT change signal, but I think we can agree that there's a bullish stress level, a bullish extreme signal from traders' net positions. Moving on to wheat, this is the Chicago wheat, of course, with a 26% change in commercials net positions. You can see that this is, once again, is a greater than average change size, pointing upwards. The signal is pointing upwards, suggesting some strengthening in the near term. Moving to a 5 years chart, you can see that the extreme over here is not as significant as what we just saw in natural gas. But similarly to natural gas, the past 2 weeks, traders have shifted their positioning towards the bullish side of the market. Moving on to a currency, the Canadian dollar against the US dollar, of course, or measured in US dollars. We have a 25% change in commercials net position. This, of course, is a bearish COT change signal suggesting weakness in the Canadian dollar in the next few days. Moving on to a 5-year chart, you can see that we had a bullish extreme for a couple of times in the past year and a half. We have seen the rise in the Canadian dollar, but with that, we are experiencing traders shifting their attention. The current reading in commercials, if you look at this horizontal line, is somewhere in between the most bearish and bullish extremes. So we are moving towards bearish extreme levels. Can we reach greater extremes? Time will tell. Nevertheless, we can state that the most recent report that we can see, this 52nd from last year, it's really the change signal that we can act upon. If you really want to look into it, if you just look at let's say a 1.5 year time horizon, then you can see that it is more of a bearish extreme territory right now. But we have seen much greater extremes in the past, something to keep in mind. Now, I will shift over our attention just to sneak peek on our wonderful iCOT Intraday Indicator. This is a section from November, an hourly candlestick chart, and we have the default setting on the Canadian dollar. So this is the USD CAD currency pair. And you can see how this indicator works. So it's something that we developed after many years of research. If you'd like to read more about it, then here you go. The iCOT has a basic version, and then the one that has this AfterSignal, it basically filters out these iCOT signals so that you can better understand where to enter or exit the market, where you have a better chance to be successful with your trade. And here you will find, of course, a lot of example charts. On this chart, we show you, by the way, on a gold 1-minute candlestick chart, the different signal types. The heart and soul of this indicator is the iCOT scores line, which you can see underneath the chart over here in green and red. And of course, you can call them speculators or commercials because they do tend to show similar stress measurements, what we're used to in classic COT analysis. So it is a successful tool to use in collaboration or supplementing classic COT analysis when you go dig into the data. We have these so-called stripe signals that are the most the strongest signals when we have both commercials and speculators at an extreme. Those are rare cases, but they too tend to give you a higher chance of success. Of course, in between, we have a bunch of other signals as well. It's a great tool. If you haven't yet checked it out, please give it a try. If you have any questions, of course, feel free to comment underneath the video or send us an email to info@cotbase.com. By the way, if you are enjoying this video, hit the like button, and if you have not yet subscribed, consider subscribing to our YouTube channel. Okay, moving on to soybean oil. We have an all-time commitments of traders extreme in both commercials and in large speculators net position. So all-time, it basically means that if we look at the entire history of COT data, mind you, this is futures and options data combined, then we can see that we have never seen commercials at such an extreme positioning. Okay, it is a bullish COT extreme, suggesting much higher prices to come. That being said, of course, caution is advised. COT analysis would not pinpoint the exact bottom or top, but rather signal that there is something going on in the market, just like those tools that scientists use when they're trying to examine stresses in a mountain, in a volcano. COT analysis is very, very similar to that. So we have a bullish COT extreme in soybean oil. The next market is metals complex. Complex is something that we've created where we combine the data, the COT data of every individual market. In case of metals, of course, we're talking about gold, silver, copper, platinum, palladium, and all that is put into one huge COT data. And that data in itself is providing us an all-time COT extreme, suggesting we may see a decline in metals after this past couple of weeks, month of rise going on. Moving on to euro, here we have 105 report extreme in commercials net positions, in large speculators net positions, because of course the middle column is for large speculators. 121 report for commercial, so significant extreme here in the euro, suggesting weakness coming in the possible next couple of weeks, month. We shall see. You can see that the last major extreme was actually a bullish extreme back over here at the beginning of last year, and that signal, looking back, was actually a successful one, pushing the euro much higher. But you can see it's sort of losing its energy, and we have this bearish extreme, which, by the way, can continue on, and we may see even greater extremes before we reach a top. But nevertheless, it's something that is significant enough and may have the capacity to push the euro back down. Last but not least, let's have a look at copper, where once again we are talking about a bearish COT extreme. Not surprisingly, after we just talked about the metals complex having that all-time extreme, obviously copper COT data is also, you know, in that. So 5 years chart, we are close to these highs, and of course the bearish extreme is not surprising. The last major extreme from, once again, early last year was a very successful bullish COT extreme, pushing the market higher. We are witnessing a bearish extreme, suggesting we could see prices falling in the copper market. That is all for this review. Of course, if you would like to go deeper into your analysis, COTBase.com offers a lot of great tools to do that. Once again, if you've got any questions, feel free to comment underneath the video or send us an email to info@cotbase.com. Thank you very much for your attention. Have a wonderful rest of your weekend. Take care and goodbye.